Hey everybody, it's Paul here doing my 30 days, 30 ETFs in 30 days. I believe this is day 4. Today I'm going to stretch this out to approximately between 5 and 10 minutes because we're going to cover 2 ETFs instead of 1. Now, I have a lot of people message me specifically on Blossom or sometimes comment on my videos from the States, a lot of American viewers, and they're a little bit jealous that they don't have access to some of the Canadian ETFs that we have access to, like Harvest and Hamilton, Evolve. So they're always looking for something that they can buy living in the States and put in their portfolio to try to mimic a portfolio like mine or Perry's, for example. And I know that everybody is pretty big on NEOS, right? You got your SPYT, you got your QQQI, and then I think it's Goldman Sachs is pretty popular with their GPICs, and I think GPIC. Personally, I also like Tap Alpha with their T-SPY and TDAC. But today, I just want to touch on 2 positions that I personally own, and I think they're doing really well. Today was a very bad day in the market. Dropped, I'm not sure what percentage, but I'm down in my RSP alone. I think I'm down about $4,000 or $5,000 today. So these 2 positions are a little bit below what they were yesterday, but that's fine. Anyways, guys, if you're looking to diversify, you want to add another company to your portfolio, and you want to go for maybe a higher target distribution rate or higher yield, here's 2 that you could consider. All right, guys, so here we are talking about Defiance. This is their SPYT, S&P 500 Income Target ETF. They aim to achieve a target annual income of 20%, paid out monthly. So we'll take a look at the strategy overview. SPYT is an actively managed exchange-traded fund dedicated to generating current income. Our strategy revolves around holding shares of ETFs that track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. Our option strategy involves selling a call option while simultaneously buying another call option at a higher strike price. By focusing on short-term options, we aim to offer an enhanced yield compared to traditional option-based strategies. So the income generation, SPYT's investment approach is meticulously designed to generate income through option premiums derived from selling index call spreads. So this is different than a covered call ETF because you're using spreads. The primary driver of the fund's yield. That's the primary driver of the fund's yield. We sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income level of 20%. So these are their target 20 ETFs. And I believe they are 0 DTE. So each day, SPYT sells credit call spreads on the S&P 500, prioritizing options with near-term expiration. This entails selling call options at or near the money strike prices and buying call options above the strike price. Should the S&P 500 value rise above the upper strike price, SPYT stands to profit from further upside appreciation in the index value. All right, so here you can see performance. Since inception, 27.8%. Year to date is 13%. So some fun details. It currently has 120 million in assets. So that's not really a lot for an American ETF, but it's not bad. You can see the fund inception was March 7th, 2024. So it's about a year and a half old. The current NAV is 18.18 and the closing price was 18.18. All right, it says the expense ratio is 0.87%. We're going to look at that a little bit further down as well because people were asking me about management expense ratios. So top holdings, you can see here that 99% of the assets are in iShares Core S&P 500 ETF which the symbol is IVV. So from what I understand is they're holding this ETF, which has the S&P 500 in it, and then that's what they're using to write their call spreads. See if there's any more. Okay, so we can come down to the distribution. You can see that the distribution has been very consistent recently. 32 cents, 32, 32, right? We'll see if we can look at another 30 cents, 30, 28, 29, 31. So I like that their payment has become quite consistent. All right, so the second ETF that I have from Defiance is basically the same as the first one, except this one's QQQT. And instead of using the S&P 500, this is using the NASDAQ. Still a distribution rate of 20.88%. Distributions monthly. Basically, it's all the same stuff in terms of their strategy. Since inception, it's up almost 22%. Year to date, 17%. This one's a lot smaller. I'm not sure why. It's only got 36 million in assets. Fund inception is June 20th, 2024, so it came out 3 months later. Top holding. So the top holding is QQQ, right, which is Invesco Trust Series 1. All right. Distributions are approximately the same, right, between 31.92 and 32.65. Okay, somebody in a previous video asked me about the management expense ratio. So I looked into the prospectus. Normally, I don't look up fees, management expense ratio fees, and that type of thing, because everything that they're paying me is net of fees. And I know that covered call ETFs or income funds have higher management fees, and that's because they're actively managed or they're borrowing money. It's a lot more complicated than just holding an index fund where the fees are very low. So I usually tend not to worry about it too much. But anyways, this is what I could find. Shows management fees of 0.85%, and then an acquired fund fees and expensive of 0.04, other expenses 0.03, for a total of 0.92%. I think they're trying to show you here that if you had 10,000 invested, so the first year would be $94. Let's take a quick look here. This is my Wealthsimple account. You can see I have QQQY here. Sorry, QQQT. I have QQQT here. I have 200 shares. Today it was down 1.18%, and my position is down $51. This, of course, does not include distributions or dividends. My SPYT position, I have 235 shares. I started to add to this position. It is down 1% today, and I'm currently down $366, almost 8% on this position. Guys, I'll be honest. I did not start my phone today. I'm not sure where we are between 5 and 10 minutes in this video. I did receive distributions today from both of them. So I got $65 from QQQT. I got $75 from SPYT. Of course, that's paid in USD. I'm Canadian, but I keep it in my RSP, so I keep it as a US denominations. And if you multiply that over the year, it's $1,680. That's approximately what I'll get. So you can see that my two positions are slightly negative, but nowhere near the amount of distributions that I'm receiving. So I am net positive on this position. So personally, I do like Defiance. They're very aggressive. They have some funds like QQQY that did not do well initially, but then they came out with these Target 20 funds. I decided to buy 200 shares of each. And honestly, guys, I completely forget about these funds. I sleep well at night. I don't worry about them. I hardly ever look at the price of them. I did add another 35 shares to the SPYT position. It was a little bit, I guess, below my average cost. I might add some to the QQQT position, but otherwise, I just keep collecting the dividends and roll that money into other ETFs such as blocks or one of the other ones in my daily snowball portfolio. All right, so that's my strategy for these two particular funds. really, I'm happy with them. That's all I can say is I'm happy with them, and I'll continue to hold them. I may build the positions, or I may just leave them as is. But I'm not really worried about them. They're based on the two most popular indexes in the states. So whether the market crashes or it doesn't crash, I'm not concerned. If it does crash, I think I will definitely pick up more shares. Back in April when it dropped, I missed that opportunity, but I won't miss it again. Anyways, guys, this is not financial advice. I'm not a financial advisor. As Ian from PPC Ian says, I'm long on these positions, but it's not financial advice. All right, guys. So until tomorrow, have a great day. Bye for now.